All right, good morning. Today is August 28th, 2024, and back with another edition of the Wednesday live show. Lots of stuff going on. This weekend is Labor Day weekend, and that marks typically the end of summer. And so I expect things to, well, typically, this would be a really dull time of the year, but of course, you probably know NVIDIA's earnings are coming out after the bell tonight, which a lot of people are looking at to sort of point the direction of the overall market, right? And that's a pretty big deal. NVIDIA is extremely volatile stock, and it's at the forefront of the AI revolution, as they say. And so it's going to be interesting to see. I mean, everybody's talking about it. They'll probably talk about it on CNBC all day long, and it'll just be interesting to watch. So, Nvidia, I saw something. I saw something earlier today. Oh, speaking of, might as well just jump right in here before I forget, like I didn't want to forget, this is the other big news of the day, is this particular stock, Super Microcomputer, is delaying their 10K filing or whatever, and so the stock's getting hammered. As you can see, it's down. Oh, jeez. I mean, this was an expensive stock. It's down almost 24% today, on top of the fact that it's already lost half of its value. So, I was looking at this chart this morning when I heard the news and kind of pondering it. And quite frankly, I could do a whole show on, you know, how something like this sort of transpires and, how this relates to trading and investing, right? Because, I mean, there's a lot to see here. You got a stock that went from $300. It was roughly $300 at the beginning of the year to 1,200. Right? It went 400% up, and then now, from 1,200 to say 400. And so when you start doing percentages and math and think about, where you might have bought this, whether you would have held on, um, whether you would have taken some profits on the way up, where you would cut losses, whether you would get back in. And I mean, there's a whole study that could be done as far as, how you would deal with something like this. And this is kind of typical. I mean, this could be a generic stock, even if you didn't even see the price scale over here. You could look at this chart and have an entire conversation about why. And so this basically, what I'm leading at here is why, those of you who've been following us for a long time know that our strategy is you pick an entry point. The first thing you figure out is where's the ideal place to put a stop loss, right? That's always the number one thing. Like I can basically look at any chart, not even knowing what it is, and say whether I would, where I would buy it, where I would where I would typically wait to buy it, right? I look at a chart and I say, well, if it went here, I would buy it. If it went here, I would not buy it, or I would avoid buying it. And then the first thing I look for is where would I put a stop loss. But my original point was taking some profits off the table when you get a move in your favor. That's always been sort of our number one strategy. You get into a stock and you get a move in your favor, and there's lots of ways to do it. But taking partial profits when you have profits, you take partial profits, lowers your cost basis, buys you a lot more sort of wiggle room for where you can have a stop. And and this is a great example of what I call, the good stock, bad stock thing. And so, to me, a good stock is if it's trading higher than your cost basis, and a bad stock is if it's trading lower than your cost basis. And so, I don't care anything about, the story. That's where everybody and I've been doing this since the 90s. That used to be the big thing in the dot-com bubble, was the story, right? And there was always a story behind a stock, and after a while, you start looking at charts and getting into technical analysis, and you realize that you just need to tune out the noise from the story. But anyway, moving on, this is just incredible because of this run here. This was like, these guys are supplying. The story is that these are the big suppliers of hardware to AI. And you can see that once this thing started, catching fire here, this was probably an earnings release here or something, and it just took off, and the stock, from here even after this, it tripled in a very short amount of time, month and a half, and then you can see exactly what's happened since then. So I wouldn't touch this thing with a 10-foot pole. And so, that's sort of the other thing, is you can almost any stock I can look at and say, well, if it if I was looking at this thing last week, you could draw some lines around this little consolidation period, and it was a perfect little pennant right there. And then you could say, well, if it breaks to the upside, maybe it'll run to, this gap or the underside of the 200, but you got the 50 coming down. I mean, the stock's clearly in a downtrend, right? So clearly in a downtrend, but I'm sure there's been tons of money made and tons of money lost. But the big daddy here is Nvidia, obviously, and I mean, this is going to be really super interesting because Nvidia is in this little consolidation, and you recall that it recently split 10 for 1, right? So the moves are even more exaggerated. Well, it seems like in percentages, and I saw this morning that this is one of the out of the S&P 500. Well, this is obviously a stock that's sort of driving the market, right? In the NASDAQ 100, the weighting of the stock is right up there. The other thing that, real quick little sidebar here is, I saw a post this morning that said if you bought Intel in 2014, look at Intel. Intel's in the Dow. I think I talked about this before. If for some reason, way back when they had swapped Nvidia for Intel in the Dow would probably be at like 60,000 or whatever. And so that's kind of goes back to what I was saying last week, how arbitrary the Dow is. But anyway, the point here is I saw someone post something to the effect of if you bought Intel at $20, back in 2014 or 2012, other than some, small dividends, you'd have made no money at all. But it occurred to me that, and I might have mentioned this last week or recently, but yeah, that person wasn't looking at a monthly chart, obviously, because if you look at a monthly chart, Intel's trading for, $20. It was $20 back in 1999. And so this was the dot-com sort of bubble and bust here, right? And so think about that. And that goes back to what I was saying a minute ago. And this is why technical analysis is, and even with investing, typically we talk about technical analysis as it relates to trading, and people talk about intraday stuff and short-term, day trading and swing trading, and they're looking at candles and trend lines and indicators and all that and technical analysis. But quite frankly, there's a place for technical analysis and charting on the longer-term time frames too, because you talk about, and it would be interesting. It would be interesting to know like what the dividends would have done for you over this, say, 24, 25 year. This is basically 25 years. If you go back to, whenever this was here to right now, Intel's trading at the same price it was, 25 years ago. So other than dividends, you've had some big ups and some big downs. And if you think about it, what I was saying before about, take locking in some profit. So, if you bought it at 20 and then you got this run up here, the stock more than doubled back here in the dot com, if you took a couple of chunks off of it, then and lowered your cost basis, well then, I don't know that you could have gotten your cost basis down to 10, but maybe you could have, right? I mean, if you bought it at 20 and you sold half of it at 40, so your cost basis, would have been $20. But anyway, the point is that over even the short term and especially the longer term, anything can happen, right? I mean, a lot has happened since this. And then quite frankly, if we just go to the weekly chart here, not that long ago, not that long ago at all, a few years back, Intel was, a $60 stock. It was at a multi-year high back here, and things probably looked pretty darn good right about here when it was breaking out to, it was breaking out to, this is a weekly chart, so, but I mean, look at these ups and downs. I mean, this is from 60 to 40 and back to 60 and back to 40. I mean, this is crazy when it comes to percentage moves, but this is kind of a disaster. What you're seeing right now is kind of a disaster. And so, um, and of course, anything can happen. As we see back here with these huge sell-offs and huge rallies back up, anytime that you see a big, gigantic, long-range down bar like that, it's usually not a good sign. But I mean, being a weekly chart here, right? So if going back to what I was saying before, like if you said to me, have to think about getting in some Intel, I would say, well, I would not buy it until it closed above that level, and then I would put a stop loss right there. And so it's as simple as that. And so maybe something happens that causes it to run back up or whatever, but that's sort of the thing. I mean, on like SMCI, when you see like a big event, I should say, like some sort of a big event like the down bar that we're getting right now, um, generally speaking, you should just completely avoid it. And patience is one of the hardest things with trading because people think they're getting a deal, and maybe it's going to bounce, and if I don't buy it now, then I might miss out. And so, but I mean, that's the wrong way to look at it. At least with Intel, you got a few weeks of, and I believe this is when they came out with earnings or whatever, because we're right in the thick of earnings season. So, but anyway, let's move on here. So back to Nvidia real quick before I take a look at the overall markets. On the weekly chart here, it's kind of interesting, this recent sell-off that we've had in the overall market and in Nvidia, and how it came right down to this level of support here. I've been doing quite a bit of reading, soul searching, and I've discovered, well, I haven't really, this is something that I've always sort of known, but I'm in my old age here, being a technical analyst for a couple of decades, I'm leaning way more towards, rather than trend lines, support and resistance levels are becoming much more important. And on the chart, I mean, obviously, drawing trend lines can be subjective, and those of you that have been watching the show for years and years know that I love like perfect trend lines and symmetry and all this kind of stuff. And every time I look at a chart, the first thing I'm tempted to do is draw a line between the lows, right? Draw a line down over the highs. And so, and you also probably recognize the fact that I'm using candlestick charts now. And of course, I've always leaned towards open, high, low, close charts for whatever reason. And well, I mean, I'm used to those. They tell me something. Candles are completely viable in a totally different sort of view, but anyway, I decided I'm going to spend a little more time looking at candlestick charts, which I mean, I have views of everything in candles, and so I do that. But I usually my go-to is open, high, low, close charts. So this is sort of interesting. And I mean, I'm sick of hearing about Nvidia, and it's all anybody's going to talk about today. But is what people are interested in, and so I gave up watching CNBC recently, and I shouldn't say gave up watching it. Well, I basically did give up watching it. I certainly gave up listening to it. That's the big thing, right? I used to have CNBC on and like I called it background noise in the office, and I used to actually look over at my TV screen more than I do these days, but a while back they changed the ticker, and they changed the way that they call it the bug, where it shows you, like right now the Dow is up 51 points. It shows you all these different things, and I tell you what, they've ruined it. They've ruined it. And the more all these years that I spent watching CNBC, it's just gone downhill and downhill and downhill, and now it's basically unwatchable. The only reason I have it on is because I can glance over there and see what the price of oil is, right? 74.42 is what oil's trading for. And so that's kind of stuff that I don't keep it on my charts, and I don't really pay much attention to it, but at least there's different things that I can look over and see, and it just kind of helps me keep track of what's going on in the markets to some degree, but not like the old days. I mean, in the old days, it was like reading the tape, and I'm talking back when stocks traded in fractions. You could watch CNBC, and you could practically use it like reading the tape, because you'd see a stock come on there, and you'd see it trading up, and it was useful. It's just not useful anymore. Anyway, I'm losing my point here. Oh yeah, my point was this is like probably half the conversation on CNBC is going to be about this. It's in an interesting spot here too. I mean, it really is. So it's going to be all about the earnings after the bell, and then of course the reaction. Right? We're looking at a daily chart here, and it's going to be interesting because sometimes, and especially recently, the first reaction, like it may all of a sudden spike up, and then a couple hours later it could be down, and then tomorrow's open could be way different than whatever it's doing after hours, and that especially is related to the conference call, and of course the CEO is a celebrity now. And this is basically, man, there ain't nothing wrong with Nvidia. I mean, this is a great company. I mean, what they've done, they're basically, supplying the picks and shovels to the gold miners of the AI revolution. And AI is super cool. I've been doing a lot with it myself lately. I use it for all kinds of stuff. Be honest with you, the images that AI can generate is just amazing. So one day I'll have to have a guest on and do a whole show about AI. But I mean, I can kind of see where it's headed, and where it's headed is it's going to replace a significant portion of. I mean, it's going to disrupt all sorts of industries and fields and jobs. And I'm talking about like 5, 10, over the past 5 or 10 years, if somebody, companies would need graphic design. Well, I guess a company would still need like a graphic designer to use AI, but small businesses no longer, need to pay people to buy a logo and stuff like that. So I mean, it's just going to disrupt like all kinds of stuff like graphic design because AI allows people to kind of do it yourself. That's the big win for it. Small companies, one person type of things, small businesses and that they can jump on Canva or something like that and use the AI to just do all kinds of stuff. And then there's lots of bad stuff too. Like it's it writes articles, and so the kids nowadays are not putting in the work. They're going to, I mean, it's just there's so much to talk about. I might not even want to go on any further because it gets boring unless you're really digging into it. So, here's Nvidia. There's a lot going on, and it's going to be. I don't know what the options are implying as far as a move, but I'm sure it's substantial. What nobody expects is a small reaction, and so you're going to get, a big red or green candle, and then of course, there's the high up there. This is actually a pretty good example of when you see these big outside candles like that, outside reversals. This one's kind of interesting. We've talked about that before. You see something like this, a big run up and then a big bearish engulfing outside reversal. You kind of expect, it to go down, and in this case it didn't really go down, just a little bit, but it took a while and it didn't go down a whole lot, right? But these, well, you see like a couple of these in a row like this. And then of course, you get a sell off in something that everybody wants, and like on this particular day here, it gapped down. This thing gapped down huge too. See, that was the other thing. This was, it's about $105 here, and then this day it opens, just above 90, and then the buyers just stepped in. That's where you get the. We've talked about all that before, but anyway, this is probably, obviously one of the most widely watched and widely held stocks, right? Think about this. If well, and the thing about it, I mean, yeah, they're great. Everything's great about this company. They're growing and this and that. But if you stand back and look at like, the old-fashioned metrics like the PE and the price to sales and the valuations of it, it's in nosebleed territory, right? I mean, Warren Buffett's not buying this stock here, put it that way. As an aside, I saw something about Warren Buffett this morning. He's selling Bank of America. He's lightening up Bank of America. He sold a bunch of his Apple too, right? So Warren Buffett was, I'm gonna guess, somewhere over around here. Apple's had a pretty nice rebound too. It's pretty amazing the percentage moves on these mega cap stocks are frightening. They really are. The way that it can sort of go parabolic and then all of a sudden kind of collapse a little bit. So, Apple's starting to. Apple's like basically right up against major resistance here too. Earnings season is still going strong, but it's kind of coming towards an end, and a lot of stocks are like right now they're showing a bunch of stock reactions to earnings, and towards the tail end of earnings season, they tend to be negative. There's a lot of stocks that they just get hammered on earnings. There was a couple other ones that just recently really got hammered when they come out with earnings. But anyway, I'll be glad when earnings season is over because that's a whole nother story. So real quick, haven't even looked at the indexes yet. Microsoft's looking a little rough here. I mean, it's still in an uptrend, but you can see kind of this head and shoulders looking pattern. When we had that recent sell-off, it was below the 200-day and kind of rallied up And this is actually, it rallied up right to sort of a major, when I talk about support and resistance now, um, more so than drawing trend lines. But I'm still obviously all about the trend of a stock. I mean, the trend of a stock is extremely important, but it's not really drawing trend lines is sort of an exercise in futility at times, other than the fact that you could say, hey, if the stock is going from the lower left to the upper right, it's in an uptrend. I mean, it's obviously in an uptrend, but the problem with trend lines, and I'm not saying that I don't use trend lines, but the major problem with trend lines is they're always only temporary, right? So this is a good example. You draw this trend line here, it broke, yeah, the stock went down, right? And then, it started to go back up, and so then what? So then you draw the trend line like this, right? And so, which is fine. I mean, this is actually a really viable trend line. And then of course, I like to use open, high, low, close charts. When you draw trend lines of candlestick charts, you end up with something different. So I'm not knocking trend lines at all. I'm basically saying, like, my sort of go-to these days is gravitating a little bit more towards horizontal levels. That's what I should say. I mean, technical analysis kind of encompasses a lot of different things, but I'm in my old age here, and of course, support and resistance always been important, but I'm gravitating more towards horizontal levels on the chart. Now, that's a beauty right there. So you can see the support and the resistance. Not looking so hot. I mean, basically the best thing Microsoft's got going for it in the near term, and that doesn't mean that, down the road it's not going to be way up here, new highs, all that kind of stuff. As the money supply grows, as the inflation sort of compounds on itself, inflation compounds. I'm sure you've seen. I almost saved a chart that I saw this morning, and it was the cumulative CPI. And, like I was saying back, over the past couple of years, but especially when inflation was really when the inflation rate, I should say, was out of control. Inflation's cumulative. So if the inflation rate dropped to zero and stayed there for the next 2 years, everything's still crazy expensive. And everything costs a lot more than it did a few years back. And so, someone screwed up. And I don't want to get too far into that now because I'm running out of time, but basically the whole idea is that stocks have to sort of, it's the one thing that you can sort of count on to keep up with inflation over time. Although, there's a lot of people out there calling for calling for a big sort of market sell-off, market collapse type thing, and you got to wonder, what the possibilities of that are. See, the thing is that the valuations, I mean, it's like people have lost sight of valuations, and I see a lot of stuff that reminds me of the dot-com days, even more egregious type of, behavior and crazy stuff. Like, for instance, when I saw that news about Supermicro, I looked over at CNBC. I was trying to their silly ticker that's like real slow and this. And I was looking over there because it was pre-market, and so I wanted to see what it was trading for and what the effect was pre-market. And so I look over there, and one of the first things I saw was like some ETF that's double long, 2x long SMCI. And so, I scratched my head because all of a sudden now there's like, 2 times long Tesla and 2 times short Tesla and 2 times long this and that. And so, all of these ridiculous leveraged single stock ETFs. is just, I mean, why would somebody create an ETF that was 2x long SMCI? That right there is like a huge red flag that something like that even exists, and that the SEC would approve that kind of stuff. I mean, why do we really need double and triple leverage single stock ETFs? And so I haven't really done a lot of exploring in that, but I can tell you that any sort of leveraged ETF is something to avoid. I mean, if you want to use leverage, then the thing to do is obviously play options, right? And so it's just silly to me. And then, which makes me wonder, and I don't get that far into the weeds on this stuff because of my old age, I like to keep things simple. That's another thing, I've been doing a lot of sort of back end revamping and exploring and kind of gearing up for the fall, because the summer doldrums tend to be a good time to kind of take it easy, and so I've been doing a lot of stuff. And a lot of the people that I respect out there, as far as analysts and just people I know, market in general, they've sort of, and myself personally, you guys that have been around a while probably know that I'm all about simplifying, right? I see charts these days where you can't even see the price because there's so many indicators on it and so much junk, and all these different sort of, I mean, there's definitely a lot of overkill when it comes to indicators and making things complicated. And so, I mean, if you look at this chart right here, you know that this is sort of my standard all these years. This is pretty much standard for me. A couple of moving averages, one indicator in the lower panel typically. I just happen to, and you notice that my MACD histogram here, I don't even have the MACD superimposed on it. So, but anyway, I've gravitated towards keeping things simple. Trend lines, moving averages, support and resistance, maybe an indicator. Sometimes I like to look at RSI down here. So real quick before I end this, let's look at the old SPX here just to get an idea of where we are here. And the other thing I was going to point out, is, there we go. That's what I was looking for. So speaking of support and resistance, right? The S&P 500 is right smack up at major resistance. And the interesting thing about right now is look at, and this is crazy, right? I don't know how I skewed my chart there, but look at today's range. This is, here we are. We're an hour into trading today. This is the smallest range. Just glancing at the chart, the smallest range on the chart. There's a couple of days, there was a couple of days with like little tiny ranges or whatever, but as of right now, the market's just looks like it's basically on hold here. And so, I had a big sharp sell-off here, and yeah, sometimes you got to wonder if this was like a legitimate sell-off, right? Because I remember this well, because I kind of, I like to see what the narrative is. I know a lot of people don't, they avoid the news and this and that, and so, I have to know what the narrative is, because curiosity for one thing. Like these 3 days right here, I couldn't look at this chart and not do some exploring about why it's selling off. But anyway, my point is, so I got CNBC on with the sound off, and I believe it was the second day. It was this day. Of course, this was the whole yen carry trade scare, and the VIX like spiked to what, 60 or something. So there's a lot of craziness going on for just a few days here. But this is what gets me. This particular day in the middle, before it had the huge gap down, all day long, CNBC, they have this humongous thing, market sell-off, and big, gigantic red section on their chart. Anyway, it was fears of recession fears. Two words, recession fears were partly to blame, and then of course it was it had to do with Japan. And then it was kind of like a 3-day panic or whatever, and then all of a sudden it started turning around, and over here, a couple days later, I'm thinking to myself, well, wait a minute, a couple days ago, the market was tanking because of everybody was fears of worried about a recession, and then there was like one economic number came out, and then it was like they pretended, oh well, everything's fine. So the sentiment, the sentiment in the market can shift on a dime. So that's something to keep in mind. It's something that obviously we knew, but something my chart got skewed here somehow. Here's another chart that I have. I'll leave with this one. This was my chart last week, and as you can see, I think I don't know how my level got screwed up there, but let me save this real quick. So this is my not a candlestick chart, and there you can see the major trend line. We broke below it, and we've managed to get back above it. So that's still a pretty viable trend line, I should say. I'm gonna leave it on there. I'm gonna leave this on here just because I want to see what it looks like. Well, I want to follow along, but when I come back and do this show next week, so here's the thing: be careful of a breakout and then a reversal. That's one of the things. That's one of the things that, and I suppose it's been going on forever, but they like to trap. The new thing is, especially with intraday trading, is trapping longs and shorts, right? And so you break out, and then people think, oh man, I'm about to miss the boat. We're at all-time highs. It's breaking out, and then they buy, and then boom, they reverse it, right? Kind of did it a little bit over here, but a spot like this whole V reversal thing, this is reminiscent of like 2015, 2016. We'd see these big sharp sell-offs and then immediate V reversals. We haven't really seen a lot of that lately, other than this is a little bit different because way back here, like that sell-off last year was a persistent sell-off that occurred over many months, and so finally when it bottomed out, I suppose you could say it looks like a V reversal, but it was a little bit different. This was sort of a sharp sell-off that occurred in a short amount of time, and then a V reversal. And so we're basically right back at the highs, and this little consolidation area right now is pretty typical of late summer. So it's all about NVIDIA. So next week, same time, same place, we'll look and see what transpired and how it all played out. Thanks for tuning in. I'll see you next